All right. Welcome back. It is Wednesday, May 29th, and we'll do what we always do, and that is zoom out to the monthly. And as we can see here on the monthly chart, we are still remaining in a balance with the previous day's close sitting 53.2475. But current market trading 52.84, so we're actually trading below the previous month's high, right? Remember, this is something that we talked about, but trading below that could increase the odds of liquidation. Looks like we got a little bit of liquidation overnight, so a key level to be paying attention to today is at 52.80, but we'll get into that more on the profile. Now, switching over to the weekly, you can see the weekly one-time framing still remains intact. Break of the weekly time framing would be a break of the low, the 52.73 half, which not very far off right now, indicating some possible change, right? This is something that we talked about yesterday, that because it was a short week and because last week's range was so tight, that the odds are pretty much very similar to what they would be, but that they are increased of a cessation of one time framing on the weekly. Now, if we do get a cessation of one time framing on the weekly, that doesn't necessarily mean, that means we would trade below this, but that doesn't necessarily mean that the market's going to be heading down and we should be in a panic. It's just going to represent a balance on a weekly basis. So we still want to remember the balance. We've got our equilibrium here down 52.43, which is likely a target should the market continue downwards. But that's really what you're paying attention to. It's on the weekly, really getting that confirmation of change. Now we switch over to the daily here, and we can see, right, daily we're one time framing higher, cessation of one time framing. Then we start one time framing higher again, then we get a cessation of one time framing. And then we've had the past 2 days inside. So get this longer term daily balance here. And like I said, we're trading 52.83 here, 75. So we're trading right towards that low of balance. And you're having to pay attention to the next ranges here. You can see we kind of failed up here. So if we fail here, where's the next target down, right? Well, we've got, a couple of things. We've got a couple untouched settles down here below. We've got a gap down here as well. So we have some references below that we can play off. The 50 moving average is lining right up with that 9 weekly moving average, which a lot of other indices are already trading at. So, something to be just kind of paying attention to or cognizant of should the market break this balance low. And then also, like I said, you want to be paying attention to, just because we break that balance low or that previous week's low, that doesn't necessarily mean that the market's just going to roll over and die. When you get a balance here, first inclination is to go with. We're getting a gap, which is nice. But if they don't get continuation, and that continuation would be a move down to like 54, or like 50.45, I think. If they don't get that continuation, expect that reversion to the mean, right? That's typically something that always happens. Now, switching over to the profiles here, you can kind of see a little bit easier with this overnight inventory. Let's see if we can get these back up here. Maybe not. Oh, actually, yeah, we could. There we go. So basically what we're looking at here, let me just fix this so it's back in the right spot. What we're kind of looking at here is that balance on the profile. We've got our balance low here. And so a breakdown below this 52.80, which has been a turning point in the past, would probably offer a test of this 69, and then the hold below that 69 puts us into that 48. There's a naked VPOC down there. And I like the zone 50 to 45. 48 just happens to be kind of right in the middle of that. So that'll be kind of the target to the downside. Should we get a little bit of bid off the open, we probably chop as people try to fill the gap. Remember, we are going to be within gap rules. And if we are able to fill the gap and find acceptance back in this 307 to 52.99.50, then we want to start kind of turning our heads and maybe looking long. We're still in a balance, right? And so we're kind of at the low of this 2-day balance. You've got this larger day that kind of outsized it, this double distribution. And so really that's kind of what I'm playing off of. Should we get acceptance back inside here, that seems to take the upside and then likely test the lower unfair low of this upper balance, most likely, right? And kind of fill in this weaker spot. Failure to get acceptance in that zone, even if there is a rally to that zone, I think that fails to get acceptance and starts to bleed back down. Once you're below this previous low, or you could even use the T2 low, you start to see acceptance back into this lower distribution and should start getting short, right? Probably around this 94 down towards that POC from here, which is about 84. So you've got about a 10-point range there. And if it gives you a nice slice through, you could catch a nice runner. But yeah, if you get acceptance in that zone, look for the prior month's high. You got the settle yesterday, 53.24.75 was a +4 settle. Yesterday was a +4 day. Surprisingly enough, even though we were right inside the previous day. But I think that is it. So yeah, you guys have a good one. Make sure you're managing risk and sticking to your trade plan. And I'll see you guys tomorrow.